What's going on, investors? AK here, bringing you the noise where we analyze the market and business news that you need to know. Let's go! Today we're gonna go over the top 3 stocks our team is watching in April. Why? Because it looks like people on YouTube love these kinds of videos. I see audiences just eat it up whenever other investing channels release them. Well, I got stocks too, guys. I can make one of these videos. Check it out, I'll even make a thumbnail like this. Yeah! Anyway, the 3 stocks we'll cover today are Micron Technologies, ticker symbol MU, WT Offshore, which is WTI, and Interactive Brokers, which is IBKR. We're currently holding all 3 of these stocks in the Micron portfolio. And for those of you that don't know, Micron is the parent company of Fallible. Okay, so first up we got Micron Technology. Micron makes semiconductors that power memory tech, like solid state drives, flash memory, and all that good stuff. You know that storage in your phone that holds all those selfies you got? That comes from a company like Micron. Now Micron kicks ass when it comes to growth. Their earnings just came out a little over a week ago and they reported $7.35 billion worth of revenue. That's an increase of 8% over the last quarter and 58% over the last year. They easily crushed analyst estimates. But what's crazy is that with growth like this, the company is still only trading at a forward PE of 5. You know what might actually be happening here is that investors are being a bunch of negative Normans. Yeah. They're worried about a flood of semiconductors coming online and drowning the market in supply. And too much supply means price drops for every chip Micron is trying to sell. See, normally the semiconductor industry is highly cyclical. It goes through extreme ups and downs, just like me, whenever I eat White Castle. There's a constant boom and bust that's all based on semiconductor end products like computers and cell phones. When things are good, companies like Micron can't produce enough chips to satisfy demand. But when things are bad, you get the oversupply that kills prices and tanks companies' profits. Investors may be scared that we're nearing the end of the cycle where this may happen to Micron. But our team doesn't agree. We think these investors are anchoring their expectations to how past semiconductor cycles played out. Back when people actually used desktops and flip phones were cool. But the demand space has completely changed over the last decade. Think about all the stuff that we need chips for now that weren't there before. Like these beefed up 4K phones with AI virtual assistants that you could ask questions to. And they respond back to you like, yes, you do look very good today. You know, that's honestly what I always wanted when I used to use that Ask Jeeves search engine back in the day. I'd be asking him all sorts of questions trying to get through puberty in one piece. Long story short, he was a terrible, terrible advisor. I don't trust anyone named Jeeves anymore. And what about autonomous cars? Think about all the chips and tech they need to make sure they don't accidentally run over people. Well, maybe not run over too many people, right, Uber? Too soon? And of course we have the Internet of Things where they're putting sensors and chips into everything, including your toilet, which you know I actually enjoy words of encouragement while I'm doing my business. Ain't nothing wrong with a positive potty. Nowadays with all this new tech, there's a much more sustainable and persistent demand for semiconductors than there used to be. This cycle has plenty more room to run. Micron is also very undervalued compared to its competitors. Like I said before, it trades at a forward PE of just 5, while Intel trades at 13 and AMD trades at 18. Prices also retracing back to the 50-day moving average, which may provide a low-risk entry point. Now the next stock we got is WT Offshore. WTI is an oil producer that should benefit strongly from the coming bull market in oil. And if you're not familiar with our oil thesis, I'll link to our video that explains it above. Make sure you check that out. Now on top of what we explained in that video, recently there's been a few more drivers spurring on this oil bull. First is Trump shaking up the White House yet again. You gotta respect how fresh Trump keeps it. The guy has always got a new suit and a new advisor. His latest move was making John Bolton his new national security advisor. Now Bolton is not a fan of the nuclear deal that Obama made with Iran. So if he can persuade Trump to pull out of it, which Trump is already leaning towards anyway, because he loves being in the locker room and bragging about how good he is at pulling out, then we'll see sanctions against Iran again, which will pull a lot of oil offline, pushing prices higher. The other driver here is Venezuela, who's seen a huge 50% decline in oil production. The country sits on one of the world's largest oil reserves, which means they could be rolling in money, but their communist government is screwing it all up. And that's why communism is bad, kids. My fallible business partner Jose is Venezuelan and currently lives there. So we get a first-hand account of all that mess. Poor guy can't even get Coca-Cola over there anymore. And if that's not a crime, then I don't know what is. Last month, Venezuela produced 25% below the OPEC production cap. Now, if oil production keeps falling because of factors like hawkish US foreign policy and the crumbling of oil-producing countries, as global demand keeps rising, then we're gonna get a shortage in oil that's gonna spike prices. But even though there's all these bullish factors going for oil companies' share prices haven't actually moved much. Surveys show that investors are still massively underweight the sector. So there's a good chance to get in here before the rest of the market realizes what's going on and the oil bull market really picks up. Right now, WTI is coming back to touch its 50-day moving average as it forms a cup with handle. So there may be a buying opportunity soon. Now, the last stock we got today is Interactive Brokers. IB is the online brokerage that our team uses, and it just so happens that their stock price is on fire. IB basically took a page from Amazon's playbook and focused all their resources on technology and efficiency. And because of it, they're by far the cheapest broker for traders. The average monthly cost for occasional traders across 16 brokers is $63. At IB, it's only $20. Huge difference. They make these cheaper prices work by stripping out all the pizzazz these other brokerages have. They don't have any brick or mortar branches, they spend half of what others do on advertising, and they don't pour money into fancy looking trading software. All these cost savings get passed down directly to their clients in the form of lower commissions. Now, IB doesn't have the most customers out of all these brokerages, but they have the right customers. They attract all the active traders in the industry who are by far the most profitable. An average IB customer trades 60 times more often than the average Schwab customer. IB's whole strategy revolves around this demographic of active traders. No one comes close to competing with them in things like margin financing, product breadth, and algo order types. They are the perfect broker for sophisticated retail traders and small professional shops. And since big banks like JP Morgan and Goldman have started imposing fees on funds under 50 million, basically treating them like unloved red-headed stepchildren, everyone has been moving to IB, who accepts carrot tops everywhere. They're dominating this niche, which is what's sending their stock price higher and higher. They're reporting earnings on the 16th, and we should expect solid results. Price is currently flirting with its 50-day moving average, which may provide a buying opportunity. Now, none of what I said today is a recommendation to go out and immediately buy one of these stocks. Especially with how the overall market is acting right now, you gotta be real careful before entering anything. We're already in these names, so we're keeping a close eye of where to cut or to add to our positions if necessary. So before you make any decisions, make sure you do your own research and stick to your investment plan. And also remember to subscribe to this channel and hit that bell for notifications of new videos. That way you'll get all our updates. Markets are crazy out there, so remember to stay fallible. Bye.